Hi, this is Ryan Nager with the Ryan Nager Group, and today we're going to talk about what is happening in the Phoenix market in summer of 2020. Okay, so let's find out what's happening in our market. It's been a couple crazy months, and we've got some really cool graphs and data that we can share with you, but I wanted to talk about a few of those things. So let's talk about first, something I've referenced a couple times, is what's called our market index. Basically, this shows us whether or not we're in a buyer or seller's market. The first graph I'm going to show with you is actually the market index for the entire Phoenix, all of the metro cities. So you can see all of these graphs are green. Green means good. So that means that in the last, in a couple weeks, that we've seen a huge increase, not only in the level of demand, but people are coming back, and there's been a lot of pent up demand, because of the shutdown. So we're really starting to see the effects of that. Couple that with inventory being at such a low level, it's really creating this kind of frenzy. We saw homes in April, 41% of homes in April had multiple offers on it. So that is increasing, the competition, and eventually, can kind of increase the prices in that area as well. So we saw 41% of homes in April, you had multiple offers. We've also seen that in April 2020 compared to April 2019, 20% less homes are for sale, than last year. So, what's kind of fueling all of this? Really a couple things. One, the Phoenix market was incredibly red hot, before the pandemic set in. We've had a lot of people that are moving in here, and a lot of people they need homes. It's one of those things that's essential. The other thing that's really fueling this is our low rate environment right now. Sure, you've kind of seen some headlines, but the rates right now are at such a low level that it's not only, fueling a lot of refinance business, but it's bringing in a lot of people that, are maybe first-time home buyers or, want to maybe move up into something, a little bit more long-term. Because if you look at how mortgage rates actually affect your payment, which is this next graph I'm going to show you, it varies significantly. So in 2006, we have probably about the same level of average price, but your monthly payment back then was $1,800. Your interest rate was 6.25%. Today, for that same priced home, you're looking at, I think it's $1,300 for the same exact house. So a $500 monthly difference savings compared to, 15 years ago when interest rates were at a much higher level. Okay, so what does this mean for our buyers and our sellers out there? For the buyers, the ones that were waiting for this market to, have some sort of blip where home prices would come down, they're just sorely disappointed. During kind of the COVID time, there was a brief window there, where sellers were, a little bit more, willing to work with buyers, but that mentality and, and that environment has dramatically shifted over the last couple of months. For the sellers, if you have a property, that you are thinking about selling, right now is a good time to start talking about it. It's a good time to be listing. We're finding sellers that have to do minimal repairs, quick closings, safe showings as well right now. So, this is a very unique time, I think, for sellers across the valley. So if you got any questions, maybe want to know what your home is worth, or if you're a buyer and want to know kind of what the process is, maybe what rates are looking like right now, we'd be happy to talk to you guys, make some introductions to our great lending partners, and help you guys out. So again, my name is Ryan Nager with the Ryan Nager Group, and thanks for tuning in.